Hey there and welcome to my channel, Paper Bag Investor, where we try and find the next multi-bagger investment. And today we're talking about LMND, a company I really like, and that's in my own portfolio. And their Q1 2020 earnings are coming out this Wednesday. Conference call this Wednesday at 8 a.m., May 12th, and probably the earnings report will probably come out Tuesday, May 11th, after the market closes. But the question we're talking about today is, and a few people have been messaging me about or asking me about in comments, is it better to buy before the earnings or after the earnings for LMND? And I'm here to tell you, I don't know. Really, I don't know, and truthfully, no one really knows. Long term, though, I'm really a long-term investor. Long term, I believe LMND really is a great investment at the current prices. And so in this video, we're going to be walking through some of the details around that and looking at some of those projected numbers on a 5-year projection for LMND as it's currently valued. Something I want to point out for these earnings specifically is we know that in Q1 we saw the Texas snowstorms that were happening there, the big freeze in Texas, which caused a lot of problems and obviously a lot of insurance claims. And Texas is one of the major customer bases for LMND. Their largest customer bases are there. So this was acknowledged and discussed on the last earnings call that it would affect numbers for this quarter. How much of this is priced in already to the stock? I think some of it is probably priced in because they're so upfront about that and expected of this, and the price of the share price of LMND has come down significantly since the last earnings call. But we'll have to wait and see on that one. And it's ultimately just something to keep in mind that this might overall be a more bearish kind of results that come out. It'll be interesting to see. For now, though, I'm going to flip to a 5-year projection for LMND and walk through those numbers. Okay, so I've shown this spreadsheet in other videos, but in today's, I'm going to be trying to going through it again quickly for anyone who's new to my channel, but also showing what it is with the sort of current to-date price for LMND, which really, in my mind, has come on sale as it has gone down in price. So I started this 5-year projection for LMND with gross earned premiums. Now, gross earned premiums, if you're new to LMND, this is different, or you're new to insurance, this is different than in-force premiums. So if you look at their last quarterly letter from the end of 2020, they had $213 million in force premium. That's kind of the main metric they showcase at the start. In-force premium means that's actual policies that are in place and active at that time. So $213 million. This is actually a leading indicator of, a little bit leading of gross earned premium. Gross earned premium, the difference is you're only earning that premium when the actual insurance policy is complete. So maybe you have a $1,000 policy for whatever it is, and it's in force. Maybe it's in force for a year, that long, that policy, before you renew, which would mean it'd be counted here, but it's not counted as a gross earned premium until that the life cycle or time on that is completed. So I started with gross earned premium, which they had 50 million in the last quarter, 26, 10 million, and scaling up from there. Started there. And 2020, for the whole year, they had 159 million, and they were projecting for 2021, 275 million. And they kind of see the year-over-year ratio of growth. I'm projecting that out. These might really be conservative projections, but I'm projecting it out at about, a 73% growth rate, 70%, 65%, 65%. Up to 2025, you'd have about $2.2 billion in gross earned premium for the whole year. How do I know that these numbers are going to keep projecting? That really starts with a fundamental qualitative analysis of the company, and I've done other videos on that as well. I will be pointing out some of the key video, or leaving links to some of my best LMND videos in the description. You can also, the description of the video, you can also find my LMND playlist with all my LMND videos here on my channel. If you go to my channel and just find playlist LMND, so you can do that as well. But really, it's that underlying qualities, and I've examined that in other videos in detail, that really, I think, are why you can assume LMND is going to keep growing, I think at this rate, or maybe even more. Now, The thing is, some of this gross earned premium is going to reinsurance because Lemonade uses reinsurance. They basically use reinsurance at this point to prevent any sort of catastrophic loss. So some of that 56% of the gross earned premium, roughly 56%, goes to reinsurers, and then 44% goes to Lemonade. How has it worked out the math? Basically, 75% of the gross earned premium right away entirely goes to reinsurers, but then 25% of the 75% goes back to Lemonade, basically to cover all their operations costs and administrative costs. And all insurers have to do is basically take the money, write their own reinsurance policies to help double check, cover the insurance, the sort of double coverage that they're providing to Lemonade. And in exchange for that. So they get 56% of the gross earned premium. Lemonade gets the balance 44%. These are not exactly right because there's actually a few percentage points that go to a long-term catastrophic fund, but this is pretty accurate. So you get down to 2025, Lemonade with reinsurance going to have 969 million in gross earned premium, 1.2 billion to the reinsurers. And I kind of, in this whole spreadsheet, I've done a sort of with reinsurance, what does it look like for Lemonade? And if they had no reinsurers and they were very confident in their own models, their own underwriting models, what would that look like as well? And long term, I think that's where Lemonade will head and go. Is eventually phase out on the different insurance products in certain different geographies where they're most confident with the products. And their own underwriting and data that they're using, they're going to slowly, I think, phase out the amount of reinsurance. And they've talked about that in different interviews, their CEOs. Okay, so then if we project out the losses, basically taking the gross earned premium and you're multiplying by a gross loss ratio, the higher the ratio means the more that is going to the losses, is being lost and is used to pay back insurance claims. So the lower your number as an insurance company, the better. So I'm putting in 70%, which I think is pretty conservative. It's about 73%. If this is 73%, if I change that to 73%, it's, again, some of the math, there's some rounding errors here a little bit, and that little difference I mentioned. But that's approximately when the reinsurers break even, is about that 73%. So anything below 73% in gross loss ratio, the reinsurers are happy. They're making their money off their products. Anything above or at over 73%, they'd actually be losing money. So if this could get down lower, which I think it potentially, might be able to get to 60%, this obviously changes and fluctuates quarter by quarter as if there's a natural disaster or something like that. But I'm putting in 70% as a realistic, but maybe a little bit conservative number. That gets you total insurance losses in 2025, 1.5 billion. And again, to your reinsurers, you have 1.1 billion, and Lemonade, that's how much they are covering, because reinsurers are covering 75% of the loss, even though they're only taking 56% of the income in. But Lemonade covers the other 25% loss themselves. So that's how much each of them is paying out. Operating costs for Lemonade, I've just projected that out. They've been growing at about 22% per year, so I've continued that projection out further. Of course, could be higher. That's definitely a risk in this analysis, in this spreadsheet here. Could be lower too, but it's not a... It could be a little bit higher. It still wouldn't totally change the numbers entirely. Of course, it could be lower and could also improve them. So by 2025, we're almost at 400 million for the whole year of operating costs. Now your operating income, projecting that out, you just do the math of the numbers we had above. If there was no reinsurance just for Lemonade, by 2025 you had about the $260 million mark of operating after you subtract these operating costs. And for the reinsurance side, if you take these reinsurance numbers and subtract those, or you take the total profit here and you that's going to Lemonade, you subtract how much is going to insurance losses, how much is going to operating costs, you get your operating income with reinsurance about 189 million. Okay. Oh, these are a lot of numbers. I hope you're staying with me here. Then we get down to net income. If you take 21%, assume as your tax rate, and you remove that, then you get a net income with reinsurance for Lemonade, 149 million, with zero reinsurance, 210 10 million. Of course, there will not be zero reinsurance by 2025. There might be fully reinsurance on all their products, but I think over time they will phase over from here to this side of the spreadsheet. Is my long-term plan, but that could take a long time. That could be, it could be decades from now before that was fully phased out, because there's a good chance, I think. Their ambitions for Lemonade is to grow globally as the most loved insurance company in the world. So you get down these net income numbers. I'm giving them a PE ratio of 100. Like those top projections, gross earned premium projections, if they're growing 60-70% a year, then getting 100 PE to me, could even be higher than that. Could be 150, 200 possibly. But I'm putting in 100, a little bit conservative. Some people might say that's too high. Maybe it should be lower. I think that's maybe a realistic number on what the price to earnings for Lemonade should be by 2025. So I'm putting in 100, and you spit out a market cap at 2025 of about $21 billion on that side and about $15 billion on that side. Now, here's where this has changed since last time I presented this in any video, is that your market cap was higher. It was $5 billion. It was even higher. You go back a few more months, Lemonade's been falling overall. But we're at about 4.8 billion market cap right now. And if you do the math, you're going to either a 15 billion or a 21 billion, and you're going from 4.86 billion market cap in 5 years' time. You're talking about a 4.3x increase or a 34% compound annual growth rate. So that's 34% year for the next 5 years. And incredible return. Again, I don't think they'll be on this reinsurance side at that point in time. But if you look at the reinsurance side, then you have about 3.1x increase. You go 4.8 up to 15 billion, you're about 3.1, and it's about 25% compound annual growth rate. Honestly, I'm looking for investments always. If I can beat 15% a year compound annual growth rate, that's a great investment. Of course, I want to do even better than that. I've since 2009 averaged about 30% per year compound annual growth rate. It might be a little bit lower than that just because Tesla is such a big part of my fund, and Tesla has come down in the last few months. But it gives you some idea, I think, what's possible. And for Lemonade, I think these sort of numbers are possible. So there you have it. Hopefully that gives you some of my long-term perspective, at least from a numbers side, on where Lemonade could go. Again, I've got other videos talking about the qualities of Lemonade and why I think it really is built on an excellent foundation, excellent qualities that could make it a really great growth stock over time. And again, to answer your question, should you buy Lemonade before earnings or should you buy Lemonades after earnings? I really don't know, and really no one truly knows how it could actually fluctuate before or after earnings. But if you like the company long term, like I do, and you're presenting this case, either way, before earnings, after earnings, I think it's going to be a good buy. Of course, I don't know how what exactly their quarterly numbers are going to be presented as, and how the market's going to see that and react to that. It could be up, could be down, could be flat. But again, I think long term, it's a really great company, and long term, I think these numbers are going to pan out. Of course, none of this is investing advice. Please do your own due diligence. Think carefully about your own investments, and feel free to challenge me in any of the numbers or things I present here on my channel. If you got value out of this video, I encourage you to subscribe. Hit that subscribe button down below. Hit that thumbs up while you're at it. Really appreciate that, and I appreciate you all for watching. See you in my next video, and remember, it's in the bag. Cheers.